Welcome to the Las Vegas Real Estate Report for June 2025. In this video, I'm going to cover the May Las Vegas key housing stats, talk about interest rates again. They continue to hover month after month around slightly below 7% on conventional loans. We are going to talk about the shift we've seen in the last couple months with more inventory, less buyer sales, less demand, and what that means for opportunities if you're a buyer or seller. There are still some great opportunities with new homes and also with homes that have been sitting on the market with a greater length of time coming into 3+ months in some cases. So let's dive in. My name is Jan O'Brien, along with my co-team member Cosmo. You can find us on subscribe if you're watching this on YouTube. We're also on TikTok and on Instagram at Living Las Vegas, Living Las Vegas Henderson. We have a team of amazing experts that cover all parts of the valley. If you got this video from one of our team members, make sure you reach out to them. They can help you with all your needs around the valley. So let's dive in and look at those May statistics. This is the real story. Very similar to what happened with the April stats and just even a little bit stronger. And I want to start with the median sales price of $480,000. Now, I just report in this video on single family. I don't group the single family and condos together. Here's the condo information if you want to stop and pause and look at it. So I'm just reporting on single family residences numbers in this video. 2 months in a row here for April and May, we've been at 480. Prior to that, we were at 485 for 3 months in a row. Now that's up 1.5% year over year, so May of 2024. But here's the real story. Units sold. So sold single family homes for the month of May were down a little over 13% compared to this time last year. That combined with a 15% increase in listings year over year, and this huge number tells the story. Units available means at the last day of May, when they did this snapshot at the Las Vegas Realtors, 6,646 single-family listings were on the market without an offer. That's up almost 72% year over year. This continues to increase as well, meaning effective inventory jumped up from like 2.8 to 3.2, meaning it would take, with the same amount of demand and number in these statistics, 3.2 months to basically get rid of all that inventory. That's up 97.6%. Okay, this is really telling the story. We basically have had more sellers, more owners put their homes on the market, combined with less people buying comparative to last year, which just means homes are sitting on the market a little bit longer unless they are highly desirable, priced well, and in great condition. All right, so let's take a look at that historically and just take a quick snapshot of the 2024 numbers. Again, single family median sales price. You can see where we started the year at 445, continue to increase to 480. Really, this number was 482. I don't know, there's two different numbers that are in there. We'll just call it 480. And we just kind of rambled around here at the last of the year, and we ended at 475. Now, January starts this year. For 3 months in a row, we jumped up 10 grand in that median sales price. This is how 2025 is shaping up. 3 months in a row of 485. And now the last 2 months at 480. And if those statistics that I just shared with you continue, we're going to definitely not increase the sales prices. They're going to stay where they are, or there's very much a potential for them to decrease. So what does that say? We believe there's a window of opportunity here if you're considering buying in the next few months. It really is all dependent upon interest rates, right? So let's talk about the interest rates. It depends on what's happening. This is the big driver of why people are sitting on the sidelines and why sellers don't all want to sell their homes that normally would have sold their homes, because majority of sellers that have a mortgage in this country have a sub 4% interest rate. And they've been hanging in their homes because they love their interest rate, but maybe they're not in love with the home anymore. Maybe they want to downsize, upsize. Maybe they need to go to a different area. But more and more people are needing to sell for different reasons, or just ready to go ahead and sell. Because the other alternative here, if you're thinking of selling, is if you can, and I'm going to talk about where the opportunities are to get some incentives on resale and new homes in just a moment. if you are ready to make a move, whether there's opportunities for buying for sure, but if you're thinking of selling and buying, and you can get into a home based on an incentive with a new home or getting the rate bought down, if you believe the interest rates are going to change in the next year plus, you can always refi. But these are, or you need to hold on to your house. Those are the alternatives, right? So let's take a look at, as I record this at the end of June, what's going on with the mortgage interest rates. Well, I always put this chart up. This is just about the last 30 days. I'm just going to look at conventional 30-year fixed. The reds mean it went up. The greens mean it went down. But you can see it's been hovering between 697 and 6.82 on June 24th. So we're right there, a few tenths of a point below 7. And that's where it's been for, honestly, the last year plus, almost 2 years. So the Fed is holding steady. Powell is, signaling. They just had a Fed rate meeting, or the information just came out as I'm recording this a couple days ago. No rate cuts expected until inflation trends are clear. It may be July. I'm hearing it's possible July. There could be an adjustment, at least one, maybe two adjustments this year. But remember, the Fed rate doesn't directly impact the mortgage interest rate. It gets built in if the mortgage industry sees what's going on with the rate moving. They make that movement prior to any potential adjustments in the Fed rate, that short-term borrowing rate. What really impacts our interest rate, of course, is mortgage-backed securities and what's happening with inflation and what is happening with the economy and the jobs. And that's why they bounce around on a daily basis. So short-term, next 1 to 3 months, expect the 30-year rates to stay in this mid to high sixes. By year end, maybe they dip down to low sixes. That's pretty much what it's looking like, barring something crazy happening with inflation, the economy, and so forth. And this is why you have to watch it all the, on a daily, weekly basis anymore. Okay, so that's the prognosis of where we are with interest rates. So where are these opportunities? Well, I mentioned a moment ago, and new builds continue to have opportunities, and this is very, very dependent upon a couple factors. The builder, their model, meaning do they build from the ground up like a KB? KB has a model where they are doing some spec homes, but they're really known for having maybe better pricing. They release their lots and you wait to have your home built that you get to choose and select. Now, they don't offer as many incentives, but you'll find that they have better pricing. Excuse me. And then you'll have other companies who like to build a lot of specs. These could be, from the Century Communities and Lennar as an example. These happen to be the incentives they're offering. So they build to spec. You don't get to choose anything. Very rarely, there might be an opportunity to choose some flooring, just depending on the timing of how far out the move-in time is ready. But right now, as I record this, there are a couple builders offering a 3-2-1 buy down, which means in this example, you can be at 1.75. Over here, it's 1.875 for the first year. Now, you're qualifying at the rate of 4.75, but you get to start year one here, year two at 2.75, year three at 3.75. Then from 4 on, you are at 4.75 fixed, and the builder is covering that cost for you. We have builders that are offering things like 4.875 fixed on a conventional loan. Now, the bottom line is incentives change on a weekly basis sometimes. Sometimes they carry through for a couple weeks. It all depends on buyer demand, their inventory, economic factors, etc. But if you've been following this channel, I have been reporting for 2+ years opportunities with new builds. And I just mentioned with what's happening in the downward pressure on pricing because of more inventory and less buyer demand, there are definitely opportunities now in the next few months for sure. So inventory is up, sales are down. I just talked about the new home opportunities, but you also have opportunities in resales. There are a lot of properties sitting on the market, not getting a lot of showings. Prices are being adjusted. There's two types of properties. It's been like this for several years. Properties that are a little older, that might be in desirable areas, but they don't have had no renovations done, no updating since the home was purchased. So we find a lot of buyers are like, well, I don't want to pay the prices on those because I don't want to renovate to today's standards. So we're having a lot of seller and buyer learning what is happening in the market. And this is why it's so important to work with a professional who knows and lives here and understands the market, can help guide you to what's the best situation for you, what's the best opportunity. And sometimes that is to wait. Sometimes it's now. It's really all individual and what your goals are. So right now, more choices, not as much competition equals negotiating power for sure. Now, when more competition is going to happen as soon as and whenever the rates get below 6%, that's what I think a lot of people have in their head. More people that have been waiting for 3+ years up to buy are going to jump into the market, and that is obviously going to switch the scales. And we're going to have, unless we have enough inventory, we're going to have a lot of demand, not as much inventory, which of course is going to equal prices going up. So there's never a perfect market. There's always something in there that has, that you have to adjust to. And we talked about the builders, and you just have to know which builders are offering what incentives, and that's where we can help you. All right, and again, I mentioned the seller opportunities. You can certainly wait. You don't need to sell. You might want to wait until there is more buyer demand, which could increase your opportunities. Right now, if you need to sell, you need to be prepared for people coming in and asking for credits and concessions and lowering the price and negotiating. Now, however, if you're needing to sell and buy, you can, I always say you can't get the best of both worlds. You can't sell high and buy low. So if you're willing to negotiate right now based on and sell right now based on what your home is worth, then you need to go buy, you're going to be in the negotiating seat. Okay. So bottom line, reach out to us. We can sit down, do a one-on-one consultation and help you figure out what is your best strategy. Make sure you're following us on our various social media channels. That's it for the June report for the May stats. We'll see you next month.